Thomas Greco, author of The End of Money and the Future of Civilization, is a preeminent scholar, educator, writer, networker, and consultant. His mission is to develop and implement innovative approaches that promote social justice, economic equity, personal freedom, social harmony, and world peace. He will be speaking on the need to address two main fronts. One is the organization of moneyless exchange mechanisms. The other is the direction of our money resources away from Wall Street and towards Main Street. Without further ado, Tom, you ready?
Well, good morning. I am in awe of what's happened over the last couple days here, and I am greatly honored to be in your presence. We've heard some fantastic presentations yesterday and today, and I feel a bit intimidated as to what I'm going to be able to present here that's going to match any of that. But I'm going to give it a try, and I'm not good at speaking off the cuff, so I have to rely on my PowerPoint presentations. And even though you can't see them very well, I can, and these are my notes, so I'll go ahead with it. I just wanted to start out by saying that I really owe a lot to E.C. Regal. And in my blog posts and various writings, I call Regal a master of monetary truth, because I probably learned more from Regal than from any other source, although there have been many sources that I've consulted over the years in my research and study of money and banking. Regal sort of put it all together in a solid conceptual foundation. He said that error has labyrinths, truth is an obelisk. And that sort of gives you the image of the kind of insight that Regal had. What I want to do is to sort of sketch the big picture, which will include an overview of our predicament. We've heard a lot about that yesterday and this morning as well, and so I just want to gloss over that fairly quickly, tie together a few loose ends, and emphasize a couple major points. And then I want to get into what we need to do to deal with the predicament, and then outline some strategies and tactics that might be effective. Now, it's undeniable at this point that we're facing a global mega crisis, and that crisis is multidimensional. It's economic, it's social, it's political, and it's environmental. And I was mentioning to Sergio yesterday, we were talking about some recent news items, and I was saying that, we are this far from a totalitarian government in this country. Now that's the bad news, but the good news is that we have lots of power that we haven't recognized yet, and I'm going to get into that. Let me ask you, how many people make your own clothes? Ah, there's one. How many people grow most of their own food? Yeah, one over there. Some, yeah, how much? Okay. All right, good. We're on the way. How many people manufacture their own automobile? How about your motor fuel? Well, the point is that we live in a very interdependent world, that it's very little that we produce for ourselves. And Adam Smith recognized that more than 200 years ago. So what are the options for transfer of value? Well, we have the gift. It's free exchange, it's voluntary. We also have coerced appropriations, like your money or your life, theft, robbery, taxes. And we also have reciprocal exchange. In reciprocal exchange, you expect to get as much as you give and to give as much as you get. Now, the gift part is a rather small part of our economic activity. The coerced appropriation is rather larger, especially when you consider the taxes, payroll taxes and such, sales taxes. But the vast majority of the economic transactions take place in the realm of reciprocal exchange. And this is where money comes in. Unfortunately, the money system has been totally corrupted and does not, as it is supposed to, assure reciprocity. Well, when we get down to root causes of the global problems, or the global problematique, as we might call it, what we find at the foundation of it is exponential growth. And we've already been told yesterday that exponential growth is something that we cannot expect to continue indefinitely. John Fullerton also gave this quote from Kenneth Boulding, and I want to repeat it. Kenneth Boulding was a respected economist, a mainstream economist with mainstream economic credentials. He taught at the University of Colorado, and he was a Quaker. And he said, anyone who believes that exponential growth can go on forever in a finite world is either a madman or an economist. And the economists are still holding to this idea of economic growth. I was listening to the Diane Rehm show a couple days ago, and they had a few respected mainstream academic economists that they were interviewing, and they were talking about the European financial crisis and the economic situation. And all they had to offer in terms of solutions was to get the economy growing again. And someone asked, well, how are you going to do that? How do you get the economy growing again? And all they could come up with was, well, you have to boost exports. And they acknowledged that, well, on the other side of exports, you have imports. So if you have an exporting country, you've got to have an importing country. And, well, how does that work out? We can't all be net exporters. We can't all have a positive trade balance. Well, we have three things that are growing exponentially that were highlighted in a book that I read more than 20 years ago by John Hamaker. It was called The Survival of Civilization. And he highlighted these three things: human population, atmospheric CO2 causing global warming, and debt. Well, human population, you know, when I was born, this will tell you how old I am, the world population was less than 2 billion people. Now it's pushing 7 billion people. Now, Hazel Henderson this morning said we don't really have to worry about population, but there was a big if. And that big if was providing women with some measure of independence. But we have huge factors that are militating against that, religious and cultural norms and practices that really keep women down and keep women from being educated and keep women from exercising their rights to birth control. So those are some of the things that we have to overcome. The atmospheric CO2, we may have passed already the limit, and we may just have to adapt to the consequences. But the thing that's really going critical, and the thing that's causing so much problem today, is the debt, the exponential growth of debt. And this chart shows that. So my thesis is that unsustainable growth is driven by the debt money system. It's the compound interest that's inherent in the way money is created that causes this growth imperative. It's usury, pure and simple. And we've had plenty of warnings about usury from all the various religious traditions, Judaism, Christianity, Islam, and yet in the last few hundred years, those warnings have been totally ignored. Now, I'm against usury not because of any scriptural writing about it, but because we now see that in real economic terms, it's an impossibility. Usury creates all kinds of problems. It's the destroyer of nations, and we have to get beyond it. Now, some of my colleagues who like to talk about peak oil and resource depletion say that it's the availability of cheap fossil fuel that has caused this growth in the economy over the last few hundred years. I say no, it's the enabler, but it's not the driver. The driver is usury, compound interest built into the money system. Of course, the brake on this whole thing is nature. Nature says, no, this can't go on indefinitely. So in order to understand, we really need to understand how money is created. Now this comes from one of the most important sources out of the Federal Reserve, which was called Modern Money Mechanics. And I urge you to read it. You can get it off the web. And basically it says the actual process of money creation takes place primarily in banks. Well, that should settle it. You know, despite what our banker friend said yesterday, that banks only loan deposits, banks create the money by making loans. And the money is the checkable liabilities of banks. That's the money in your account. They increase when the proceeds of loans made by banks are credited to borrowers' accounts. That's it, pure and simple. Now, graphically, you go to a bank and you say, I want a mortgage. You sign a note, that's an asset on the bank's books, and they make a deposit to your account. That's a liability on the bank's books. It's as simple as that. And John Kenneth Galbraith, the noted economist of the last century, said, the way in which banks create money is so simple that the mind is repelled. People just can't believe it's that simple. But there's a problem with this. As interest accrues on those loans, there's an insufficiency of money in circulation in order for everybody to pay what they owe. Now, the system can be sustained for a time, and we'll get into that in a minute. But it's a situation that makes money chronically scarce, because everybody's scrambling to try to pay what they owe and avoid default. It's the magic of compound interest. And these charts show how that magic works. Well, you can see that on this scale, you can go quite a few years before the debt grows to monstrous proportions. And this chart is in millions of dollars here. This one is in billions of dollars. I've got two rates of interest, 6% and 10%. 6% is out here, the solid line, and the dashed line is 10%. Now, 4 percentage points doesn't sound like much, does it? But you see what happens with just a 4% change in interest, 4 percentage point change. The break point occurs much earlier at 10% than it does at 6%, and the numbers go stratospheric much sooner. So the actual numbers behind this chart are here. And we're talking about the growth of a single dollar. This is future value of a dollar at compound interest. In 50 years, a single dollar of debt at 6% becomes an $18 debt, and at 10% it becomes a $117 debt. And dropping down to 200 years, a single dollar at 6% in 200 years is a $115,000 debt, and at 10% it's a $189 million debt. Now, you can check these numbers for yourself. They're accurate. Just get a financial calculator or a computer spreadsheet and run it. It's not just theory. This is what's actually happening in practice. This is the world. This is the United States debt for all sectors, public and private. And the dashed line, which is hard to see here, is GDP, gross domestic product. It's a measure of total economic output for the U.S. economy. Well, you can see back in 1965, total debt for all sectors, public and private, was about 1.5 times GDP. In the last year on this chart, which is 2007, it was 3.5 times GDP. Now, why is debt growing faster than GDP? Why is debt growing faster than population? Why is debt growing faster than anything real in the world? It's because of this compound interest and the way the money is created. Here's the government portion of that debt. Now, these are the latest figures I have as of a few days ago. The United States government is now $15.7 trillion in debt. That's money that you and I owe whoever holds dollars. The Chinese hold a lot of them, other foreigners hold a lot of them, and various investors. That's $50,000 per capita. That's your share and your kids' share of that debt. And that's not including the guarantees, which go into several hundreds of trillions. It's not just a U.S. phenomenon. Here's the rest of the world. Japan indicates about 5 times GDP, their total debt. The UK, almost the same. Spain, South Korea, France, Italy, Switzerland. The United States is, 6th or 7th on the list. So what we have is a political money system. It's a debt money system where credit is monopolized by a banking cartel, and it's really the most powerful criminal syndicate in the history of the world. That's what it has come to. And this central banking cartel is headed by a central bank, and the central bank in every country is sort of the gatekeeper that allocates the money creation power amongst the cartel members. And every country of the world has a central bank. Some of them are nominally owned by their governments, but they're controlled by the bankers. In the United States, of course, it's the Federal Reserve banks. And those currencies of those central banks are given legal tender status. Now, legal tender is a key element in this monopolization process, because legal tender says you must accept this money, this currency, in payment of debts, public or private. Otherwise, you have no recourse to the courts. So what this does is it prevents people from refusing the currency or from discounting it. Now, in a free money market, you should be able to discount a currency. If you say the currency is being abused and it's no longer worth what it was a year ago or 2 years ago, then I'll accept it, but at 80% of face value. So we have credit money lent into circulation at interest by the banking cartel, which requires the endless expansion of debt, which drives endless expansion of the economy. When will it be enough? This is a pictorial representation of the credit commons. Now, I spoke in Berlin a year and a half ago at a commons conference that was organized by a think tank supported by the Green Party in Germany, and I introduced the idea of the credit commons. People were talking about various other aspects of the commons, and Hazel Henderson mentioned the commons this morning, and it's becoming a hot topic of conversation. But people have overlooked the fact that credit is a commons. It's our credit that we give to the banks, and then we beg them to lend some of it back to us and pay them interest for the privilege. So the way it works is this way. The only way we can access the credit commons now is by going through the banking cartel. The credit has been privatized. Now, the banks will lend either into the private sector or into the public sector. And they've done this repeatedly with the different bubble and bust cycles. You know, we had When I was a student in university, I went to the University of Villanova right here down the pike, a long time ago. There was no such thing as a student loan. Banks would not give you a loan to go to school. That was absurd. That was not sound banking practice. But, you know, the system demands that debt be continually expanded, so bankers have to find new ways to indebt the people. So we start with student loans. Then we have dot-com boom. Okay, banks ready to lend, make money available for startups, new high technology companies. Then we had the real estate bubble. Banks relaxed their requirements on giving loans for real estate. They took on all comers. Come ye all, we will give you a loan if you buy a house or buy a vacation property or buy commercial real estate. We don't care what it is. So we had the real estate bubble. Well, of course, eventually every bubble has to burst when the loans cannot be serviced and there's defaults and then foreclosures, and then properties get thrown back on the market and prices have to go back down towards normal. We're still not towards normal prices yet. And what happened when all these bank loans went bad? Well, did the government bail out the borrowers? No. The government bailed out the lenders that caused the problem in the first place. And so we gave the money to the banks. Well, where did the government get the money? Well, the government got the money from the banks. You know, it's sort of a circular kind of a process. So we have a parasite infestation, or maybe a more adequate description would be, we have a cancer in the body politic. And so what the politicians want us to do is to keep feeding the cancer and starve the body. We have these three parasitic drains on the body politic: interest, inflation, which is a hidden form of taxation, and taxes, because government has become so centralized and controlled by the money power that they allocate all kinds of money to wasteful and destructive programs. The military-industrial complex, maintaining the empire all over the world. I don't know, what's the last count? 130 countries where the United States has some kind of military base or operation. 800? There aren't that many countries, are there?
1,000 bases. 1,000 bases.
Well, whatever it is, you know, you get the point. So this monetary regime is dysfunctional and exploitative. Money is kept artificially scarce, it's expensive because of the interest, and it's misallocated. So the result is the system centralizes power in few hands, it concentrates wealth, and it creates class conflict. It undermines popular government, and it forces artificial growth, it erodes the social fabric, and it destroys the environment. Reginald McKenna, former president of the Midland Bank in England, said, "Those who create and issue money and credit direct the policies of government and hold in the hollow of their hands the destiny of the people." And Ellen mentioned the Rothschild quote yesterday, "Give me the power to create a nation's money and I don't care who makes the laws." And she also mentioned Carroll Quigley, and this bears repeating because it really describes what we've been dealing with for the last many decades. The powers of financial capitalism had a far-reaching plan, and it's been a plan that's been in action for a long time. Nothing less than to create a world system of financial control in private hands, able to dominate the political system of each country and their economy, the economy of the world as a whole. The secret, which is no longer a secret, is that they have annexed from governments, monarchies, and republics the power to create the world's money. Now, that's what we're dealing with, and that's what we have to get around. A direct assault head-on is not going to work. But I'll show you what's going to work. So we have the systematic failure of conventional money in banking and increasing amplitude in the bubble and bust cycle. I think we've reached the last cycle. There may be one more left, but I think not. The mega Bible, the mega bubble that is now forming. I got this from the PIMCO website just a few days ago. It shows what's happening, what's being done to keep the system alive. What you have is a massive inflation of currencies around the world. It's not only the Federal Reserve, but also the Bank of England, the European Central Bank, and the Bank of Japan. These are the ones that are highlighted here. They're all massively inflating their currencies in order to keep the system going. Well, how are they inflating? They're basically buying worthless securities. A lot of it, the securities of governments, like the United States government. How many people believe that the U.S. government debt will ever be repaid? Well, we'll have to talk about that. So this global system is about to self-destruct. Now, you may not be able to read this, but I like this cartoon. Dr. Bernanke explaining quantitative easing. He says, if we feed the banks enough dollars, something good is bound to come out the other end eventually. So the question that people are asking is, well, are we going to have inflation? Are we having deflation? Or is it stagflation? You know, Nicole Foss, who I respect greatly, has been talking about deflation. And many of us have also been talking about inflation. Well, we're getting both. You know, it's a question of deciding who's going to pay the burden of this profligate spending in this cancerous system. Are we going to throw people out of work? Yes. Are we going to cause businesses to bankrupt? Yes. Are we going to inflate the currency? Yes. Well, inflating the currency eventually has to inflate prices. Your purchasing power is going down. You know, I spend a lot of time abroad, and every time I come back to the U.S., I find my grocery bill has gone up 10, 15%. I'm trying to get some historic prices because I want to create what I call the Trader Joe's Index. Trader Joe's is my favorite grocery store, and you know, even Trader Joe's, as good as their prices are, they keep going up. Well, we have a class war that's going on. We have wealth and power being concentrated in the hands of fewer and fewer people, what you might call the superclass. And here's a quote from Warren Buffett. It appeared in the New York Times just a few years ago. He acknowledged that there's a class war going on. And he says, it's my class, the rich class, that's making war, and we're winning. Well, we all die eventually. What did Keynes say? In the long run, we're all dead. So we see this income maldistribution, and this chart shows how the rungs on the economic ladder are spreading farther and farther apart. And the lowest levels are going up very little, if at all. And this chart really doesn't come up to date. It only goes to about 2005. But wealth is even more lopsided. And this shows on the left side, you can see the top quarter of the population owns about 87% of the wealth. The bottom quarter owns virtually nothing. The next higher quarter, about 3%, and the second quarter from the top, about 10%. So where is civilization headed? We can move toward disintegration and collapse. We could find ourselves in another dark age? Or are we going toward a societal metamorphosis, what I call the new convivial society that's characterized by generosity, compassion, solidarity? I'm optimistic. I call it the butterfly society. And communities are actually building the butterfly from the bottom up. The most effective strategy, I think, is to work in our local communities, empower ourselves and empower our communities to localize and decentralize as much as we can, especially with regard to money and credit. So Alvin Toffler, more than 30 years ago, in his book, The Third Wave, said the industrial era is at an end. And I think we can see that very clearly. The world is going through this metamorphic change, and the convivial era is emerging. And I like this quote from Richard Bach. He wrote the Jonathan Livingston Seagull. Some of you may have read it, one of my favorite books. It says, what the caterpillar calls the end of the world, the master calls the butterfly. So let's not get hung up on the past. Let's not try to hold on to what we've got. Let's embrace the change, embrace the future, and move on to a world that we can say that works for all. Toffler also highlighted the problem of scale. We have a mass society that emphasizes mass production, mass distribution, mass education, mass media, mass education, mass recreation, mass entertainment, and weapons of mass destruction. And the most powerful of those weapons is the debt money system. So the old caterpillar economics promotes continuous growth of economic output, quantitative measures of well-being, privatization of capital and capital accumulation, resource consumption, competition for control, labor productivity. How much more value can we get out of each unit of labor? Well, doesn't that throw people out of work? Don't we have unemployment problem? Why don't we find a way to better share the benefits of automation? And it promotes growing disparities of wealth and power and massive scale. This is the consumer society. The new butterfly economics promotes steady state economic output, an end to growth, qualitative measures of value and well-being, and Hazel Henderson has been one of the leaders in doing that. Restoration of the commons, resource productivity. Resource productivity is where we have to move to. We've got to get more value out of each barrel of oil, each ton of iron, each pound of stuff. And we have to distribute more equitably the production. And we have to get things down to a human scale that we can control and influence. This is the convivial society. I visualize it sort of like community economies are like small boat harbors. The globalization scheme that has been foisted off on us over the last several decades has been a scheme to take down the seawalls, to make each economy accessible to the big ships, so to speak, the big mega corporations. In the process, the small, medium-sized businesses have been damaged or put out of business because they have a difficult time competing with the subsidies given to the mega corporations. So continuing this analogy, we need to empower ourselves and empower our local economies by finding ways to insulate but not isolate our local economies from the global economy, to enhance economic vitality, reduce exploitation, enable self-determination, and optimize our standard of living and quality of life. Now, there are two kinds of credit that we need to consider. And there are two different functions that come into play. We have exchange credit, which is the credit that is supposed to facilitate the exchange of goods and services, sometimes called turnover credit. And there's finance credit, which is the credit that is needed to finance long-term projects, to provide for capital formation, new business development, and business expansion. Now, exchange credit is short-term. It's the basis for newly created money. Finance credit is long-term. It should not be used as a basis for creating money. You have to get long-term from people in order to finance capital projects. So I want you to keep that in mind as we go through the rest of this presentation. So in devolving power to the local communities, we need to, first of all, reclaim the credit commons and create cashless exchange associations, or credit clearing associations, and private local currencies. We need to shift savings of existing money from Wall Street to Main Street. We have to change our investment priorities. Especially in the face of inflation, our investment priorities become preservation of capital, preservation of capital, preservation of capital. So by supporting enterprises in our local communities that make our communities more self-reliant and resilient, we can preserve our capital and assure the supplies of necessities in our local communities. And we also have to move from employment to enterprise. You know, in other countries of the world, people are less dependent on a job. They're enterprising. I read a statistic not too long ago. In India, something like 90% of the people are self-employed. In Thailand, it's probably 80%. So we're moving our money, we're spending locally, we're saving locally, and we're investing locally. And we have to do more of that. And we have to apply our dollar resources to projects that enhance, as I said, the local resilience. We're shifting personal investment objectives. Socially responsible investment is becoming more proactive. Localization of supply is becoming increasingly important. Our supply chains are stretched far and wide. We have to shrink those back. We're disintermediating. We're going to crowdfunding and crowdsourcing. Islamic finance is making some inroads with innovative equity approaches, and we're going to end interest, hopefully entirely. So the future of money that I see, you know, we've gone through an evolutionary process with money being initially commodities. In the colonies, gold and silver were commonly used as money, but also tobacco, irons, wheat, various other commodities that were generally useful were used as an exchange medium. Then we went to symbolic money, where you had your gold deposited in a bank, and then the banks would issue notes, basically warehouse receipts that represented the gold on deposit. Then we went to credit money. The invention of credit money gave us a flexible monetary supply, so that was a good thing. However, that credit money system has been perverted into the debt money system, which causes this growth imperative that I mentioned. So the future of exchange lies in decentralized autonomous mutual credit clearing networks that will be linked together in wide area networks. But we will control credit locally, just like you control your own local computer, but will be tied into a network that allows us to have use of that credit globally. Now, the way this works, we form an association. The smiley faces are the members of the association, and some of the members have a privilege of overdraft. That means you can have a negative balance in your account. The process begins when you have one member buy something from another member and pay using credit. And that credit can then circulate throughout the association, but eventually it has to come back to the issuer and be accepted for real value goods and services. Basically, it's a simple process of debits and credits, keeping records. We don't need money, we don't need banks. And this is not pie in the sky. It's something that's already being done. It's been done for a long time. The best examples we have are the commercial barter exchanges. They don't really do barter, they do credit clearing. You have a number of businesses that are members of these trade exchanges, and they buy and sell from one another without using money. They simply keep a record of debits and credits. The Veer Bank in Switzerland, that's me in that's 2005 in Basel, Switzerland. Sergio took this picture. We visited the Veer Bank, and we visited a number of different businesses that were accepting Veer credits. The Veer had a massive growth spurt during the mid-1990s, and then it stopped. And it stopped, I think, because the Veer became a conventional bank with a conventional bank charter, and I think is being undermined from within to suppress this direct credit clearing process and turn it into a conventional bank. They are still dealing in Veer credits, and there are 60,000 members of this Veer bank doing about $2 billion worth of trades a year. So it was started in 1934. It's been going all these years, and it's still thriving. Credit clearing and counter trade worldwide account for about $12 billion of annual trade, involving about 400,000 companies worldwide. And various sources estimate the volume of non-monetary trade at between 15 and 25%. So this is already being done. All we need to do is to optimize the systems and network them together. The advantages of trade exchanges of private currencies are they provide the productive sector with a reliable and friendly source of credit that's sufficient, interest-free, and community controlled. These are the keys. They reduce dependence on banks and scarce political currencies and enable fuller utilization of local business capacity and employment. The exchange mechanisms are self-adjusting, stable, and sustainable. We don't have this growth imperative built into it. So what about banks? Where do banks come into this convivial society? Well, we can still have banks, but the role of banks is going to change. We're going to have accounting for credit clearing services. That's what banks can do. Banks already do credit clearing. We just don't recognize it. Your employer deposits your pay in your account, let's say once a month, and you take your checkbook or your debit card and you go shopping. So when you get paid, that's a credit. When you shop, that's a debit. So it's just a record-keeping process. The banks are already doing this, but they like us to think that when your account goes negative, that's a loan and they want to charge interest on it. They can broker savings and investments. They can be depository banks where they connect savers with users of the funds, but there will be no lending at interest in my ideal world. Okay, my time is running out, so I'm going to move ahead quickly. John Fullerton also mentioned this point yesterday about banking being a public service and a profession rather than a business. And I got this quote from Ralph Borsotti. I don't have time to talk about him, but I would encourage you to look up Borsotti on the internet. He said, "The essential nature of banking is a profession, and like every profession, should be conducted to render service by men whose motivation is service, first, last, and all the time, just like medicine and law and other professions." So what can national governments do? Well, a national government can spend its currency directly into circulation, but there should be no monetization of government debt. When you monetize government debt, as the central banks have been doing, you put empty dollars into the economy. It doesn't put additional goods into the economy. So there's an accounting principle called matching. And this applies also to the creation of money. Money should be created in the process of putting goods and services into the economy, period. Governments need to rescind general legal tender. They should not force people to accept any currency at face value if the currency is being abused and debased. And Salmon P. Chase, who oversaw the greenback issuance during Lincoln's administration, later as Supreme Court Justice, said, "The legal tender quality is valuable only for the purposes of dishonesty." Governments should also limit the amount of currency issued, the amount of currency that they issue, to about 1/2 its average annual revenues, and that's being generous. And they should adopt an objective standard of value and unit of account. You know, we used to have an objective standard of value. At the beginning of the United States, the US dollar was defined in terms of silver. 391 1/4 grains of fine silver was the definition of the US dollar. So we could value every other thing, wheat, tobacco, services, in silver terms. And we called the dollar, or we called that amount of silver the dollar. But of course, governments want to abuse the issuance privilege, so they put in these legal tender laws that say you must accept the paper just as if it's silver, and so silver goes out of circulation. You know, when I first went to Las Vegas, they were using silver dollars as chips. That was a long time ago. What else governments should do is encourage and support the organization of credit clearing associations and private community currencies that provide interest-free exchange media. Pipe dream. Support the development of software and other infrastructure elements that enable these local associations to be networked into a functional whole. And mandate open access at little or no cost to the existing payment infrastructure, the MasterCard and Visa card readers on the retailer's shelf. Do I expect any of this? No. I don't expect national governments to do any of that because they've all become captive of the superclass who run the system for their benefit to further centralize power and concentrate wealth. But we don't have to go that route. We can reclaim our own power and organize at the local level. Regional governments and business associations can act on their own behalf by reducing competition with each other. You know, get out of the race to the bottom. Invest in local infrastructure and enterprises. Shouldn't a local economic development office, instead of trying to lure some big company to come and bring a few jobs with tax rebates and incentives, shouldn't they just support the businesses that are already in the community by developing the infrastructure and helping those businesses to do more business with one another? And can't they enhance the opportunities for local exchange by mapping the territory, finding out who's doing what, where they're sourcing things from, and where they might source them locally? And finally, shouldn't they increase the local value added? Instead of exporting raw materials, why not export some finished products that get a higher price? And finally, why not monetize the local value added locally by having a local currency? Now, I have a 5-stage development plan that's in my latest book, The End of Money and the Future of Civilization, and it basically follows this outline. This is what we can do locally. Future prospects, I think non-bank credit clearing will proliferate in the form of private and mutual credit clearing associations. Private currencies issued by businesses and lower levels of government will become more common. Internet payment systems using non-bank credit will proliferate. And Sergio and I have been working on a payment module for online marketplaces to provide that. And in the money picture in the butterfly society, we're going to have one common value unit, one common pricing unit, but we will have many currencies. We will have distributed power over the credit. We will let the market decide the value of each currency in relation to our standard unit of account. There will be no forced circulation through legal tender laws. And I want to end with this quote from E.C. Regal. He says, "To trade goods and services is a natural right of people. To issue money necessary to make these exchanges, is also the natural right of all people who are intelligent enough to do so. We need not beg for money. We need not be money slaves. We can be money masters. When we have become money masters, we shall master all our economic and political problems." So we are facing a new dawn of a new age. We can build a new civilization by reclaiming our own power. And the time to do it is now. Thank you. Do we have time for questions?
Yeah, let's do a couple.
I just want to point out some resources. I would like to refer you to my website, beyondmoney.net, and my archival site, reinventingmoney.com. And here are a few titles of my books, and one from Regal and one from D. Hock. You will also find Regal's books on the web. He has 3 books that I recommend: Flight from Inflation, A New Approach to Freedom, which will appeal to libertarians especially, and Private Enterprise Money. These are all free downloads from the internet. Beyondmoney.net, you'll find the links to them there.
I'm the one person that raised his hand, I think, when you asked whether the national debt would be paid down. And the reason I raised my hand is that I think it's been demonstrated by Ellen and others that there doesn't need to be any national debt. And if we got control of the economy, we would be eliminating the national debt altogether. And there are 2 ways to do that, either by printing money or by having the Federal Reserve lend money to the government, which in effect is at no interest because it pays back any interest that it collects from the government. And as Ron Paul said, it's free to just burn up the government bonds that it buys. So in one way or another, I think that $50,000 per capita of national debt is going to go away eventually.
How does debt usually go away? Debt usually goes away either by repaying it or by bankrupting.
No, it's,
Now,
there are two
bankrupting-
ways. Aunt Tilly has a bond in her bank vault.
Yeah.
She goes down to the bank when it matures, a U.S. Treasury bond. She normally takes the $1,000 bond, puts it on the table, and says, "Give me $1,000," and I give her $1,000, and then she buys another bond. And
Okay.
what she's told is that there is no other bond you can buy because we're not issuing any more bonds. So that, in short, the $50,000, in my opinion, I don't want to protract the conversation about that because, in my opinion, much more serious is the other $100,000 per capita that's owned, which is the non-federal debt that everybody has. And the total debt that you showed and showed once or twice before here is much more seriously the problem. And a lot of people at this conference believe that this is all a consequence of fractional reserve banking and interest payments and et cetera, et cetera. And there are various people that we can refer to as experts who can illuminate all of that. But my favorite expert on all of this is the Andrews Sisters, who once recorded a song called "Them That Has Gets." And that's all you really need to know. You don't need to know anything about the money system or fractional reserve banking or how bankers create money from nothing or anything. All you have to know is that as a consequence of having something, people get more. And that has resulted in increasing inequality of income, which must be changed. And it will be changed one way or another.
Was there a question there?
Just a quick question. In these exchange systems, what do you think of the labor hour as being a unit of account?
Well, how do you measure the value of a labor hour? The value of labor, it's been said, is inherent in the product. You know, I could spend hours and hours doing sculpture, and it would probably not bring anything in the market, because I don't know how to sculpt. I'm not a good sculptor. So the proof of the pudding is in the eating, so to speak. Time, we measure labor in time because it's a convenience. But no, not entirely. An entrepreneur gets rewarded not according to how much time she spends on doing what she does, but on the product or service that she sells. And so there have been a lot of attempts to try to denominate things in our units. The Ithaca hour currency, for example, is denominated in hours. And right at the outset, people wanted to know, well, how does that relate to dollars? What's the relationship between an hour and a dollar? And they just sort of came up with the idea that, well, an average wage might be $10. So an Ithaca hour is sort of equivalent to $10. Well, what is it today? You know, that was 20 years ago, and we've had massive inflation of the US dollar. What's an Ithaca hour worth now? I don't know. It's too indefinite. My own preference for a measure of value, and in my first book, Money and Debt, A Solution to the Global Crisis, which you can download for free off the web as well, I said the three things need to be segregated. The three things that money is supposed to do: measure of value, medium of exchange, store of value. These are conflicting functions, and we need to separate those conflicting functions. Credit money should be a medium of exchange, pure and simple. If you want to store value, you use something else. You know, you buy some commodity, or you get a equity stake in a company, or you make a loan. If you want to measure value, you have to measure it with something objective. Right now, the US dollar is both a measure of value and a means of payment, or a medium of exchange. And that's only because of the legal tender laws that obliterates the value standard of 371¼ grains of silver. So I favor a market basket of commodities as being the measure of value and the pricing unit.
Great. Thanks, Tom. We have to
Is that it?